Yo, yo, what's going on? How's everybody doing? My friends, my people. Guys, it is a pleasure to have everybody in here. How's everybody doing on this great Sabbath of ours? Oh, that's fantastic. John from Queens, what's up, baby? Guys, let me know where you're coming in from. Give me the heat, man. Let me know where you are. Awesome. Mike from Bloomington. We got some people from Edmonton. Holy crap. My business partner, Josh, is from Edmonton, too. Ganesh. Ganesh, hello, my friend. Marco, good to see you as always. Prabhat, how you doing, my friend? Holy moly. Shane from Dallas. The DT. Yeah. Jacob from Ohio, good. Is it me or is it the Midwest really the last place in the world where there are sane people left? Y'all know what I'm talking about. Chris from Connecticut. Mario from South Africa, one place I have not been but always have wanted to go. John, how you doing, brother? Awesome. Brandon from Los Angeles. Okay. How was everybody's weekend? Who got drunk, did some drugs, and got arrested this weekend? Just kidding. You always got to ask. Yes, everything will be recorded, guys, so don't worry if you miss one of my funny jokes. Awesome. Well, it's a pleasure to have everybody here. Man, we got a fun time prepared for you guys. If you could just let me know, just so I know, because I tend to ad-lib sometimes when we do webinars, depending on the audience. Can you just let me know, type in the box if this is your first webinar with me, or if you're just brand new to trading, just so I know to slow things down when we get to certain points. So let me know if you are brand new to trading. Yes, this is live, of course. You don't watch the Rolling Stones on YouTube. You got to watch it live. Awesome. So who's brand new to trading stocks? Oh, man, I'm so excited for so many of you guys. Lewis, Chuck Donnelly, Terry. Okay, Ashwin, hello. Antonio. Awesome. Mike, testing 1, 2, 3. I see you, baby. Oh, man. Awesome. Okay, so we got a lot of brand new people, so I'm going to go things slow. So just to give you guys a heads up, for those of you guys that are new to me or what I do, I tend to meander. I'm sure you've been to a lot of these kind of webinars where they say they're going to teach you something and you just get like this whole pile of whatever. Well, in this one, you'll get a little pile of whatever, of course. But we really are going to get down into the nitty-gritty on a few really important things. Iqbal, I see you. And we're going to learn something. So this webinar, it may go a little bit longer than you think. It's going to have a little bit more information than you think. So take notes. You will be able to watch it again. I'll make sure everything is recorded. It's archived. It's got everything that you need so that you can re-watch it. All right. And if you're brand new to this, don't worry. Some of this stuff won't make sense, right? Some of this stuff won't make sense, but it will by the end of this 4 days class. For those of you guys that have been trading for a while or have been in some of our other webinars, remember, this is 4 days of stuff. When you have 4 days of stuff, the first day is a little bit beginner, right? It's still going to be awesome, but it's a little bit beginner. And then we start to layer in concepts every single day. So that's going to be huge. And guys, the chat box is just for me to see your questions, not for you guys to chit chat with each other. This is not X videos where you got to leave comments on all the videos. You guys all want to chat with each other. This is a one-man show, but I will make sure. I'd tangent here, but one time I was having all these people in a webinar all these comments on one of my YouTube videos. There was like 20 derogatory comments. And I asked my mentor, I'm like, man, I got so many people hating on me on my YouTube video. He goes, bro, people are crazy. I'm like, but yeah, but they're hating on me. He goes, the only thing you got to think about in this world when you think about people leaving you comments on YouTube videos, he goes, people leave comments on porn. That's all I got to say. I'm like, true. All right, good stuff. So guys, I will make sure that I will answer everybody's questions toward the end. What I like to do is really have kind of a free-flowing webinar because I can't stare at the chat box the whole time. You know, I need to make sure that I'm focused on the teaching and all that fun stuff. And then I'll get into all the questions at the end, I promise. So I won't be blowing you guys off. I'll make sure to answer everything. I'm going to go over the agenda really quickly for you guys so that you guys kind of understand where we're going with this thing. But also more importantly, you know, if you got tied up or you're thinking, man, I can't show up for this or that, just know these are going to be some of the favorites, and these are going to be where you got to go with this. So day one, we're going to talk about technical analysis, which is the art of charting. I'm going to show you how to set up your charts. You probably see I look at charts all day. I got 2 TVs in the background, always showing charts. It's fantastic. But what we got to do always with our charting is, you know, understand how the heck we set these bad boys up. All right. And that's going to be really, really important when you think about, you know, just charting in general. So what we're going to do is actually we're going to go in and I'm going to set up your charts. I'm going to show you exactly what we need to do so that we can learn and we can really get things going. So that's going to be really, really important. All right. On the other side of things, we're going to talk about charting basics, understanding market cycles, and all that kind of fun stuff that goes with it. Guys, that's going to be really, really important. So the foundation for charting and understanding this stuff is really important, right? That's like, well, that's going to be the most important thing that we do, like when we're talking about trading. And so I want to talk about basics, understanding market cycles, defining trading strategies, and anything else that you could think of that has to do with that. Day two, we're going to dig into our routines. We're going to sit there and talk about trends, risk management, how to time your trades. That's going to be awesome because one of the things about trading is like it's so complicated sometimes, where we make it complicated, that what we really want to be doing is like dumbing things down into routines, and then always focused on trends, risk management, and really how to time the trades. Like how the heck do we get in and out of these things? So like for a lot of you guys, you see stocks or you see things that like you're really interested in, but you don't know how to get into them. So this will help you get into really, it's going to help you figure out those exact entry points in these stocks. Number 3, trading psychology, right? So like for some of you guys, you've probably already been through this, but like for some of you guys, you probably have noticed like, man, sometimes when you're trading, it's so difficult to control your emotions, right? Like you get scared or you get excited or all of the above. That's going to be really like just a huge thing when we talk about trading. So that trading psychology, the mindset, like how to be a winner, how to plan out your day, how to overcome fear, how to come over losses. You know, one of the best things that probably my only saving grace as a businessman and a trader is that like I'm really resilient because I understand that it's a numbers game. And so like when I get knocked down, I'm able to kind of come back. That's a psychology of winning. You know, it's a psychology of winning. And a lot of people, they don't have that. But guess what? It can be learned. Like you learn it over time. Like I wasn't always like that. I learned how to be that from my mentors and people that I've worked with in the past. How to trade breakouts and breakdowns, which is like I'm going to give you some of my favorite trading strategies. Then number 3, how to align on multiple time frames. So that's like essentially day trading strategies where you take something that you like long term. I want to buy XYZ, and then you figure out how the heck you day trade it, which is hugely important. A lot of times people just day trade what they want to day trade. But what they forget is that we want to be always trading in things that are riding in with the trends. If you see a really creepy Canadian answering you questions in the chat box, that's my business partner. His name is Josh Mudrick. He looks like Justin Bieber. He's a wonderful Canadian gentleman. You guys would really like him. He was one of my students from when he was 16 years old. I shit you not, he was at 16 years old. He begged his parents to take my class. He was out there delivering pizzas and doing all sorts of weird stuff to get money. And then, yeah, he's disgustingly handsome. I won't even show you his Facebook because then you won't want to really chat with him. But he's been my student since he was 16. Now he's almost graduated college. He works for us. He's a fantastic budding trader. He's not all the way there yet, but he's really good. He can make money, and he can make good money every day. And I suspect at some point he's going to be at an elite level very soon, which is an awesome gift to have, right? Could you imagine you're 22 years old and you don't have to really go to office anymore? Well, he doesn't anyways, but that's where he's going at this, and that's what he's got a really good insight into how to progress as a trader without blowing up all of your stuff. Yes, John, this Josh. And then day 4, we're going to talk about how to transition to full-time trading. For a lot of you guys, you're coming in here to make some extra income or just learn a couple things. For some of you guys, if you were like me and you've got a cranky boss, you're stuck in a cubicle, you're gaining a little weight, you're losing all your hair, you're ready to get out. So I'm going to show you what it would actually take to be a full-time trader. I won't blow smoke up your ass. It's a hard job. It's hard work to get there. But once you get there, it's pretty awesome. It's a rewarding journey, just not when you're in the thick of it, because you're like, right? It's stressful. Anytime you're trying to do something amazing, something above and beyond what normal people think they can do, it's tough. But we've got an awesome system and an awesome support group to help you guys. And then I'm going to just talk to you a little bit about how to put it all together, right? Like, what do you need to transition? How do you put these trades together? How much capital do you need? What kind of brokers? All that kind of fun stuff that you need. We'll talk about that. So we've got a jam-packed 4-day agenda. It's going to be awesome. Guys, every single day, all right, we'll have a special offer and a contest for somebody. So we're going to be giving away free memberships to my chat room where I trade live in front of everybody. We're going to be giving away some trading boot camps for a lot of you guys that have seen me all over the world traveling. A lot of that's been speaking at cryptocurrency conferences. So I'll be giving away some cryptocurrency classes also. All right. So I'll introduce myself real quick, and then I won't bullshit you for the rest of the day. I'm Kunal. I'm the head janitor at Bulls on Wall Street. All right. That's me, right? I do all of the stuff here. I've got a team of 12 people that work for me. They're fantastic. We're going to talk about technical analysis and why we use it. I'm going to go over charting basics, what moving averages to use. So we'll be talking about trading indicators that you need to be successful. Then we're going to talk about market cycles. So in day trading and short-term trading, people are always thinking about the trading aspect of things, but it's actually the market cycles and what cycle you're in that governs exactly when and how you trade. Different cycles require different patterns. Most people don't know that. Like right now, a lot of people are trying these kind of breakout patterns, and they're just losing their shirt on like all these type of breakout patterns. This is not the right market to trade breakouts in because we're in a different type of market. So a lot of people, we're going to discuss that. And then we'll talk about how to define your trading strategy. Some of you guys are going to want to day trade. Some of you guys will want to swing trade. So we'll kind of figure out how do you like identify who I am as a trader or what type of trading I do. See, in trading, guys, you can make good money in any style. It's finding the style that fits what you like to do, where your skills are, and then most importantly, like your job situation, right? Like, can I sit in front of the computer and sashay around like a all day, or do I have to do longer trades? So that's going to be something that's really important. So like I said, I'm Kanan, the founder of Bulls on Wall Street, Bulls on Crypto Street. I started this business now 10 years ago. I hate saying it because it makes me feel old. I started this business 10 years ago in my 20s. I work with my 4 best friends from grade school. We were 8 years old. My business partner, my right-hand man, Mary Beth, woman. Mary Beth was my first student. I've got people like Josh that have been taking my class from years ago that work for me. All of our team is people that have been with me forever. I've been trading stocks now since I was 27.5 years old professionally. I was a profitable trader even the years before that, but I had to save up money to do it for a full-time living, which is something I'm going to show you how to do. Guys, this is the best job in the world if you can get it right. I've been speaker all over the world. I was just in Tokyo. I just spoke in Orlando. I've been in London. So really globally, I've been traveling around teaching people my life's passion and my main talent. I don't got many talents, but this is one of them. And I'm excited to show you guys. I've taught literally thousands of students. When you open the internet and Google, you type in day trading company, day trading learning, almost a good chunk of those people that have websites have been students of mine. Some of the biggest people that you've seen around have taken my course, gone through my chat room, been mentored by me. And then most importantly, I teach a momentum-based trading style. That's what we're going to focus on in the next 4 days, how to trade momentum. The reason we trade momentum and the way I teach it is that it's the best for people with small accounts and best for retail people that have less than $5 million. All right. There is like a value investing like Warren Buffett, right? Those kind of longer term trades of buying good companies. But what if you have like $2,000? Well, is making 10% a year going to do anything for you? No. When you have smaller amounts of capital, you have to be in the best and fastest moving stocks to turn small amounts of money into much larger amounts of money. And that's where we go with this. I studied every single kind of trading you can think of. There's nothing, any style you can think of that I haven't done. But I find that this style is the best. If you have $10,000 and you're thinking, man, I need to grow it to XYZ and I need to make $500,000 in a day, then this is the only style that really works for that, doing it consistently and without a lot of risk. So in terms of our business, in terms of our business, we founded this thing 10 years ago. We grew quickly. Man, I have all the different services, but how I started this webinar-based thing that I'm doing right now is that my business partner, Mary Beth, my first student, she was a member of our day trading chat room, and she was asking me all these questions, and I started to teach her on Skype. Back in the day, there was no webinar. I started teaching her on Skype. Everything I know, day in and day out, just badgering her. And, over time, she started to get really good, and we started thinking like, whoa, that worked out pretty well. She's like, yeah, it did, right? And she came up with the idea, like maybe, what you did for me, you should do it like for larger groups of people. So we expanded this to, a whole group of people. So I teach a 60-day boot camp that's basically designed to take somebody from A to Z on everything that we need to know about trading. So it takes 60 days. My personal belief is that this takes 60 days to get all the material down. All right. So that's going to be one of the most important things that we do. So let's talk a little bit about some problems that we can solve today. How to find the best stocks to trade. Knowing how to enter stocks at the right time. A support team. Day trading is a lonely game. You're always sitting in a laptop alone with your losses or your dreams, and it can get very lonely. So that lifetime support, like our classes, you get lifetime access to it. You can take them live as many times as you want. So you have that lifetime support. I have students in this webinar right now. I see some of you guys, Big Mike, that took my class 4 or 5 years ago. But anytime I do something, they're in it, right? So that lifetime relationship. And then most importantly, staying on top of trends. The market shifts all the time. It never changes, but it subtly shifts. And so having somebody that's there, always watching the nuances, and then being able to come into class for life so that you know them, because you have stuff to do, that's how it gets very, very important. So anytime that, you guys want to talk to some of our students, you want to meet some of these guys or talk to them on the phone, hear what we're all about, you let me know. I mean, every single person that I work with is probably going to say something good about me. So let's knock all this junk off. Let's get into work. The first 10 minutes are going to be a little bit basic as I'm going to explain you the terminology. And then we're going to dig into charting basics, all right? Charting basics, and I'm going to get you and show you how to set up your platforms, all right? So first, let's get into terminology. What is a stock? It's just a share in ownership of a company. I buy a share of Google. That means you own a piece of Google. When Google does good, stocks can go up. When it does bad, vice versa. You buy and sell stocks using a broker. So that's really the simplest stuff, right? You have E-Trade, Ameritrade, InvestTrade, whatever there is, Speed Trader, which is one of my preferred brokers. These are going to be really the best out of all the brokers. So you can trade any of the stuff with any of your brokers and software right from your laptop. I've traded in over 30 different countries in the last few years. It's pretty fun. You need a laptop, you need a couple tools, and you're good to go. So let's talk about this. What are some different styles of trading, and what are we going to touch on? Day trading is when you enter and exit a position during the stock market hours. So the market is open from 9:30 to 4 p.m. This is my favorite style to make big returns in a short period of time. But day trading is the hardest style of all of the trading because it requires quick thinking and fast execution. So like when you think about day trading versus other types of trading, the analysis is the same. But in day trading, you get 5 seconds to think about it versus swing trading, which is your multi-day hold, right? You could have days to think about it. So like your swing trading is when you enter a position and you hold for a few days or weeks. It's a little bit less active, but you're capturing substantial moves. So what a swing trade is if you think a stock is going to break out, you might hold it for 3, 4, 5, 10 days, and you're going to capture that bigger gain, that 20, 30%. That's one trade. Versus day trading, you're looking at the same stock as a swing trader, but you're in and out of it all day, capturing all the little bursts and then adding it up into the bigger gain. There is no one thing is better than the other. In day trading, you may take 20 trades and capture 1 or 2% on each one, where in a swing trade, you may just take the whole 30% rip. See what I mean? And so in the end, you kind of lead to the same place. It's just one is a longer term trade. The other one, you're zigzagging in and out of it quite often. And then your longer term investing is buying and holding a stock for months or years. This is the least active type of investing and the one that I do the least. I'm day trading all day and then swing trading for those explosive moments. My longer term investment, I do in cryptocurrency, which I believe is going to be probably the next big hot thing for the next 10, 15, 20 years. And so my longer term investments where I'm hoping for 10x, 20x returns, but it's over the course of a couple of years, is centered towards cryptocurrency, and then of course investing back into my own businesses and more traditional size businesses. I own a moving company and some other things that I like to invest in for cash income. So that's kind of the 3 different aspects of it. So how is money made in the stock market? Well, number one, most people don't know that you can actually short stock. So longing a stock is when you buy. So you buy something at $80, it goes 100, you get 20 bucks. You're shorting a stock means that you're actually betting on it to go down. One of my best years trading, I wasn't even that good of a trader yet. I was a young buck. I was 2008 was one of my best years because the market crashed. It was like the world was ending, and I was shorting stocks, betting on them to go down. You know, during that phase, like I was living at home, and my parents and me were Indians. Indian people always live together. It's crazy. Like your parents are stuck with you. So in 2007, I bought my parents a house. You know, when I was working, I was like, this is gonna be awesome. I bought my parents a house, and then I was gonna just live in the house that they were staying in. And my mom was like, what? Why would two people live in two households 2 blocks away? I don't get it. So she made me, we let that house sit empty, and I would sit there with my dad all day, staying with my parents, and I'd live in the other house but I was only allowed to sleep there. So I'd be sitting there trading all day. 2008, my dad worked at the same company his whole life at Unisys, and I'm from Michigan. That stock went from $40, $50 down to 10 cents. His life savings just all the way back down. And there was nothing that he would do about it. I'm like, dude, you got to short these things. He's like, I can't short cannot short my own company. I'm like, just short it, man. This thing's going to go down. Hedge, the shares that you already own. I had the best year of my life. And, you know, my dad and so many other people got smoked in 2008 because the market cratered. So you got to learn how to short stocks. That's a big part of what I do. 50% of my trades are actually betting on stocks to go down. There's different types of investing. Remember that. Swing trading, day trading. Those are the two that I focus on. Trading. It's always a gamble without a strict and tested strategy. Remember that, if you can focus on reward to risk, the most important thing in trading, a lot of people focus on win ratios, but your reward to risk ratios are going to be the most important thing you do. Can every gain you have be 20% and every loss you have 5%, right? Something like that. Can every gain as a day trader be 3% and your loss is 1%? What happens is if you have a good reward to risk, where you have really, really good rules on when you get out, you can have a very, very low win ratio and still make money as a trader. So let's get into it. So what is technical analysis? And guys, can you give me, who's here right now, who has a charting platform that they use every day, and who's got a charting platform, and what do you guys use? If you could just let me know so I know where to go. Okay, Tiffany with TC2000. Kenya, my baby girl. TOS. Okay, sure, trader. TOS. It looks like a lot of you use TOS. A lot of people use the trading view. MTI. Ami Broker. Okay. Investograms. Cool. Jeff. What's FETS? All right. Cool. And who here has no charting platform? If you can just put in, I have none, then I'm going to show you how to set one up that's free. Who's got none? Mike? Scott? Good. Guys, beginners, by the way, I have found that my best students are people that are coming into this brand new, because it's like you just have a fresh mind and a fresh slate, and that's awesome. So I love to see that. I want to see that. It's invigorating. So I'm going to show you guys how to set up a chart in a hot second. No, don't worry if you don't have one. I'm going to give you one. It's free. Let's talk about foundation of our trading style is technical analysis. So guys, there's different types of people. There's fundamental analysis. That's your Warren Buffett's, like your big mutual fund managers, all this kind of stuff, right? Then why don't we use, does anybody know, give me an idea, why do we not use fundamental analysis? Like reading balance sheets, digging in about the products, does Coca-Cola taste good or bad? Why do we not do that? Xavier, that's probably true. Good, good. A lot of people, oh, good, great answer. So why we don't look into the fundamentals is that this, to dig into the fundamentals of a company could take hours to days, all right? When we are short-term trading, we may only be holding for 15, 20 minutes or a couple hours. Sometimes when I'm day trading, I shit you not, you'll see it all the time, you'll take big rips in stocks, and it might happen in like 5, 10 minutes. So if I'm going to be holding something for 5, 10 minutes, why am I going to spend 10 days reading about it? Fundamentals is awesome. It works, but it's a little bit subjective. It works, but you have to apply it to, I'm holding something for years. The fundamentals of Google apply, sure, over the next year, 2 years, because you want to see where the company's going. But if you're going to hold Google for 30 minutes, does the fundamentals matter? Probably not, right? Long term, stocks move on fundamentals. Short term, and I'm talking when I mean short term, between 5 minutes and 14 days, let's say, a couple weeks, stocks just move on news, momentum, all this kind of stuff. So very, very short-term trading is based on the action that's happening now versus, right, the real fundamentals of a company. So what we're going to talk about is interpreting market data, identifying areas of supply and demand, and then, of course, the reason we use TAs so that you know when to buy and sell, right? Technical analysis, which is the study of actual market data and price, allows you to survive in all market conditions. Why this is good is that, look, technical analysis is the reading of actual price data that's happened. So it's something that's real. So in a bear market, there's going to be good companies that just go down every day. So if you're a good company and you're properly valued at 100, in a bear market, you could go down to 20. You'd lose all your damn money. You lose all your damn money, but it's still a good company, but that's subjective, right? It has nothing to do with what's happening in the now. So we use technical analysis to make short-term concrete decisions based on facts. Bear market is like your 2008 trading where the market is just crashing, right? So a bear market is defined by any time a market goes moves under 20% for the year. We're going to talk a little bit about support and resistance, right? Learning the levels where stocks are going to bounce, and then the different types of support and resistance. All right, that's going to be very, very important. So let's set up our damn charts. How about that? Dun, 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 dun. Give me a. So for those of you guys that do not have a charting platform, open up your Internet Explorer. I'm going to just show you how to set up charts real quick. I'm going to show you what they all do. Is that cool? So go to freestockcharts.com. All right. So now everybody on this thing, freestockcharts.com. Hot damn. All right, good. Now follow along with me. All right, good. Cambia. Am I saying that right, by the way? Cambia or Cambia? Nino, good. Click the run-free version. Camia, we got a Camia and Cambia. What are the odds? All right, awesome. All right, cool. So as this thing pops up, I want you to type in new, open, create new layout. All right, so it's going to look something like this, right? Which is just, it means nothing at the moment. All right. So what I want you to do, so let's make sure we're all looking at maybe the same ticker. So pull up, see right here, click this thing here. So by the way, free stop charts is just a free version of the trading software that I've used for the last decade called TC2000. I use TC2000 for maybe 10 years. It's the most bang for the buck. We'll talk a little bit about more TC2000 later, but let's talk about this. So where it says SPY here, I want you to change this to HUYA. So this is stock that I trade like every day, so I'm going to just bring that up. Actually, you know what? Let's not do that. Bring this up, put that shop. I love this stuff. Type in shop. All right. Cool. Guys, remember it's recorded, so don't worry about all this stuff. Just follow along. It's better to actually just watch and then follow along later via video. All right, so just watch. The thing that happens, I learned this a long time ago. I used to always, my mentor, I had so many great mentors here, but my mentor, Ben Newman, he's like a performance coach. And he'd always be barking at me like certain stuff. I'd be sitting there writing it down. And he'd be giving me this crazy, like, motivational speech. So he's like really intense. He'd be like, hey, are you fucking listening to me? You gotta fucking respect the process. And you give me like 10 things to do, and I'm like sitting there writing it down. He's like, bro, how are you gonna feel the passion of what I'm saying if you're sitting there with your paper and pencil? And I'm like, because I'm trying to get it all down. He goes, you don't make millions jotting down notes. I'm like, all right. And what he was essentially saying is, feel the moment, right? Get into the moment versus sitting there with your abacus, and you can always go back. So see this shop here? Take this thing, draw your mouse here, and make this thing a little bit smaller. And then now let's get into this. Whoa, I think I froze on this thing. Hold on. Whoop. Give me a second. Do people not use abacuses anymore? Sorry, man. I'm Indian, man. We love a good math problem. All right, cool. So now, let's take this shot. Let's get this thing, let's get the shredding going on. See where it says 10 minutes here? Open this thing up to daily. Click this daily right here. All right, you guys got that so far? Cool. Armengo, welcome back. Cool. So now we got daily. So now what we're going to do is overlay indicators, all right? If you guys are not familiar with indicators, all indicators they're like different things that you apply to a chart to add confirmation to the actual chart. They apply confirmation to the actual chart, all right? So they're just different levels that we add. So what I want you to do is hit this indicator button here, and I want you to type in the word moving. All right, I'm gonna add that in. Don't worry, I'm gonna go fast because we don't want this turned into like a 6-hour thing. Some of you guys are already overseas. So add moving average to price history right here. Click that, boom. I want you to do that 4 times. Boop. Add price history too, so just keep doing it. If I could turn back time, if I could find a way. Who sings that? Man, you guys are slow. No, that's Selena. If I could turn back time. Man, Journey, what's going on here? There you go, Randall. Marco, a lot of you guys know. Okay. Who said Journey? That's quite amazing. I may give you a prize just for that. All right, so now we got these 4 things. 1, 2, 3, 4. So let's click each one. Click this button here, edit. I want you to change this to 9. This number to 9, where it says period. See where it says average type, turn this to exponential. Cool? Oh, yeah. All right, good, 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 good. Now, what we want to be doing, so I changed the color. So click this button here, change the color. All right, now click OK. Okay. Shamit, I got you, baby. Didn't I just text with you later today? See, I got elephant brain. Shit for brains, but still elephant brain. Now change this one. Click the next one, change this to 20. All right, now let's change the color to something sexy, something lascivious. For those of you guys that don't know lascivious, you got to go back to school. Free stock charts usually works best at Internet Explorer. Cambia, don't worry, man. I already told you you're going to be lost. Don't act like I didn't say it. Now change this one. Don't worry, guys. It's all recorded. Live in the moment. Don't follow along. Live in the moment. It's like those damn people with their damn cell phones, right? You ever see, like, I go to Bali, I'm like at the most beautiful fucking resort in the world. And I got this beautiful house. It's on this cliffside. And I'm like taking it. I'm with my parents. And you'll see these people doing this. And like here you are watching the most majestic sunset. And rather than living in the moment, they're like this. And it's the stupidest thing I ever heard. Like, live in the moment. Enjoy yourselves a little bit. All right. So this next one, let's change this color too. A little fuchsia. Who doesn't like fuchsia? Come on. We're not animals here. And then this next one, change this to 200. Change that to red. Oh, man, look at this pretty picture we have. Good, right? So this is what your chart's going to look like. So let's talk a little bit about what the heck all this stuff does and why it's important. All right? Let's talk a little bit about what it does and then why it's important. Y'all good with that? Cool. So this is 9, 20, 50, 200. And guys, so this is just your daily chart. So for those of you guys that are not familiar with what we do, your daily chart is the most important chart that we can get. So why we do this and why it's important is that all your ideas in trading are going to come from your daily chart. Why is that your daily chart is the most powerful thing you can actually get in a chart. And so that's really, really important when in the scheme of charting. So when we think about like charting, this chart right here is the foundation for everything that you do. This chart right here is the foundation for everything that you do. Because your daily chart, and I'm going to show you what all this stuff does. So who here is not familiar with like what the actual charts do? Good. Don't worry about the damn VWAP. We get there. Don't you worry, Mikey. Cool. So when you think about charting, think about it like this. Oh, sorry. When we think about charting, think about it like this. So charting allows us to see the actions. And Martin, you're got to be damn retarded to call me during the middle of a webinar. You might already be. Charting allows us to see the actions of all traders in a graphical format. We begin with price. It's the most important component on a chart. All right. So like these things that you see on the chart. See all these things? These are called candles. All right. So the candle of a chart represents the candle on a chart represents the action of each day. The action of each day. So what happens is, and why we want to do this is, so each one of these candles represents what happened that day. So a green candle means a stock went up. A red candle means a stock went down for the day. So like you can see, like, so see this candle here, like how it's formed. So what it's essentially saying is that this day it went from 173 down to 164. So it dropped $10. A green candle means like it went up for the day. So it went from 160 to 172. Does that make sense? So green means up. Red means down. Green means up. Red means down. This is very, very important. Easy enough, right? Green good, red bad. So now when we're thinking about this stuff, so price is shown by the candlesticks. Guys, price is the most important chart feature because price shows us if there's a discernible trend in a stock. So what we do is we trade trends. Guys, trends are the most powerful thing in life, in business, and in stocks. When the trend is hot, when you're hot, life is great. But when you go counter to it, or when the trend ends, what happens? Everything falls apart. But in stock trading, the most powerful thing, the most basic thing is the ability to ride a trend for a very long period of time. Because when you can do that, those are the easiest, lowest risk trades that you can think of. So when we look at price, one of the first things that we're always asking ourselves is this thing in a trend? Well, guess what? How do you figure that out? Well, this was 40 bucks, now it's 177. Obviously, the trend is up. It's been going higher, right? So that's one way to spot a trend. The second way to spot a trend we're going to learn in a hot second. So price shows us if trend is up or down. And there's different ways to look at it. Of course, there's longer term trends, which is up, and then you'll have short term trends where you may be down for a little bit and then you reverse back to the bigger trend. One of the things to remember is that trends are nearly impossible to kill in good companies. And so when you have short term corrections, meaning that there are moments where a stock goes down, but it is in the direction of a long-term trend, more than likely that trend gets eaten up, means bought up, and it continues on. And so we want to always trade with the trend. My biggest losses in my career have been trading against the trend. When I was a kid, I wouldn't say a kid because I had a damn mustache and a hairy chest and probably a hairy back, but all Indian people do from the day we were born. But when I was a new trader and I was in college and the market had been crashing, one of the things that I did, so there's a company called Global Crossing, all right? This thing was at hundreds of dollars. It dipped down to like $6-7 bucks. And one day the CEO was on CNBC and he's like, oh my gosh, like we have all this stuff going on. I'm like, oh, what kind of stuff? And all of a sudden he's like, we've got like billions of miles of undersea cables that we're using to connect our networks. And I'm like, shit, networks, that sounds pretty cool. And billions of miles sounds cool. And he's like, and we're going to be doing this and that. I'm like, shit, I better buy some of that. So this thing had been going down. It's not even a company anymore. It's been going down every single damn day for like a year. Hundreds of dollars to $5-6. So I buy some. It keeps going down. So I'm like, shit, well, now it's only $3. I better buy some more. I can get a lot more shares. And then it keeps going down. And it keeps going down. And you know what happens like over time is just, it goes down into nothing, right? And you'll see that like so many times, like when you're looking at stocks is like, once the trend is down, some of these things will just they'll go to nothing. You'll have something that is at $40 and the trend is down, and it'll just keep going down and down and down and down, and there's no end in sight. Just because something is cheap doesn't mean it's good. You're not at the grocery store. You're not at Target. Cheap in stocks is not good. We want to be in the business of riding trends to the upside. And if we can do that, now we're in the game. But to the downside, like you want to be shorting this thing. You want to be betting on it to go down. You don't want to be scooping it up because it's cheap. My mentor, Paul, used to tell me this all the time because I'd always want to buy stocks that are cheap. He'd say, you know what, Gonell, bottom pickers, which just means you're buying stocks on the bottom. Bottom pickers, stinky fingers. Right? Like, because it means that you're going to get burnt. And so we always want to be riding in the direction of the trend. What would you rather do? Buy something when it's dipping in a stock that's trending like this, or buy something that's dipping in a stock that looks like this? It's a no buenos. That's Spanish for no good, for those of you guys that don't know. We always want to be riding in the direction of that trend. So price shows a discernible trend. Price shows us how a stock reacts around key levels on a chart. So when we're thinking about a chart, like there will be levels that you look at that a price will react really well to. So like when we look and we're learning, we're going to learn a couple patterns here in the next couple of days. But like this pattern here is called a flat top breakout. So what a flat top breakout is it is a pattern that essentially is based around a tabletop being around a stock. All right. It's a pattern where there's literally a lid on a stock that it can't get above. So like you have a level here at 44, let's just call this 44.80, right? So you have a lid on this stock at 44.80. So at some point, if you break above, what will happen? It's called an inflection point. It's called an inflection point. See, when you hold down a stock for so long and you keep testing a level, that level builds up significance, but it also builds up power. So when you actually break above it, you can start an explosion that starts for months to potentially years. So that's a pattern that we learned. That's a level. So your daily chart shows us how a stock reacts around key levels on a chart. And then most importantly, price shows us a pattern of a particular stock and the setup. So patterns are the most important thing, all right? Patterns are the most important thing. So when we think about patterns, there's going to be, I teach 18 different patterns in my trading boot camp. 18, but they encompass all different types of markets, all right? So there's breakout patterns and then dip patterns, so on and so forth. But your patterns is the most important thing that starts with the stock. So let's rewind the tape a little bit. All this stuff, your indicators, your moving averages, all this stuff, how do they relate? Like all this stuff that, don't worry, RC, it's all recorded. So how does this all relate? When you think of a trade, when you think of all this stuff that's on a chart, it's a lot of information, right? It's a lot of information. So how do you think about like how to compile all this information? I'm going to rewind the tape a little bit. When you look at a chart and its indicators, you have to look at this like you're a lawyer. Meaning that for you to take a trade, you have to compile pieces of evidence in your favor that puts a verdict in your favor. So like when you look at a chart, every single piece of the chart is a piece of evidence. And you can't take a trade till you have proven beyond a doubt that a trade is worth taking. So what I mean by that is that, okay, so you're a lawyer and we have this chart. Where do you start? Like, so a lot of you guys are new. Where do you start? Like, how do I know it's good? So how you have to look at this. This part you write down. Every trade is a 50-50 shot. It's a goddamn coin flip. You win, you lose. Stocks go up, they go down. Every trade is a 50-50 shot. It's all luck. But what happens is, if you can align some of these stuff in your favor, you can take a trade that's a coin flip and take it beyond reasonable doubt. So the first thing, so write this down. The first thing that you look on a chart is for a pattern. Do I have a pattern? If I have a pattern, then now I've moved the needle from something that's 50-50 to say something that's 60-40. So like this pattern, and thanks Chuck, this pattern right here is called a flat top breakout. This is a pattern where I trade intraday, daily charts all the time. So this pattern right here, see how you test these levels? This is one pattern. This is called a flat top breakout. So like a trade is just luck. But if you have a flat top breakout, an explosive pattern, well, maybe you take that trade from 50-50 to 60-40. Okay, well, now we have indicators that we're adding, right? So I have my moving averages. I have my volume. And then I want you to add a couple more. I want you to add STO, stochastics. I want you to add this to the bottom. I'm going to show you what all this stuff does. Don't worry about that. So stochastics, I want you to change this to 5, leave everything else the same. Change this to 5, leave everything else the same. Okay. So I have a flat top breakout. That moves a pattern from 50-50 to 60-40. Good. Now I got something. How's my volume pattern look? Well, when you have when you break out over like in a flat top breakout and the volume expands, so a volume bar, we're going to touch on this in the next slide, but a volume bar just represents the amount of people that are buying and selling that stock that particular day. So if there's expanded volume, that means that there's more people interested in it. So when a stock breaks a level, if people are rushing in, it gives confirmation. It assigns validity to the price move. It assigns validity because a price could move, but if the volume expands, if it goes from 1 million to 5 million, that's 500%. It's telling you, it's assigning validity and confirmation to that move. So now you're taking something from 60-40 to let's say 70-30. Pretty cool, right? Now we're going to learn some things about some moving averages. So say your moving averages are like curling up right up under this stock because that adds support. Well, now you're taking some from 70-30 to 80-20. So like every trade is a guess. When you trade, most people trade, it's all luck. But if you can think like a lawyer and assign pieces of evidence in your favor that says, these are the things that are going for it. These are the things that are lining up in my favor, and it assigns validity, assigns confirmation. And now imagine if you did that 1,000 times in a row. You have taken the needle from something that's 50-50 to something that could be 70-30, and it's duplicatable. It's scalable because it's a system you can follow. When you think about pattern first, volume second, moving averages, stochastics, and you start lining them up. Well, yeah, one trade could be a loss because maybe it just doesn't work. But if you keep doing it over and over and over, what happens is now you're building a system, a methodology that can work long term, that's scalable. So yeah, you take 3 trades, maybe this way doesn't work. One's a loss, one's not. It's still a crapshoot. Your sample size is too small. But if you do it for 100 trades, I guarantee you that something like this can work. And that's where we've got to go with this. We have to think about every single trade as a lawyer. Most people get a trade, it's all a gamble. Oh, this stock has a history of going up. Oh, this stock has this. Oh, my chat room said this. Oh, they said this on the news. Lies, 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 lies. Can't trust anybody except maybe your mama in trading. And even then be dubious. Because most likely your mom doesn't know how to trade. But moms are always right. You have to look at this as a lawyer. Remember that each trade, every dollar you spend, and this is where people screw up. They look at trading as a way to get rich. So they gamble with their money. But remember that every dollar you spend is money that you could be going towards your mortgage, your kids' tuitions, family vacation, other things, right? So you can't go in with the gamble of just trading to trade. We've got to go in with the passion and the knowledge that every trade has to be confirmed by building a case like a lawyer. Volume is the second most important indicator on a chart after price. Volume illustrates the number of shares that were traded at a specific time. Things to look at is liquidity. I very rarely trade stocks that do less than 1 million shares a day in volume. I see great charts all the time, but I need liquidity. Why? If I cannot get in and out of a stock easily, oh boy, you're in for some trouble. I'll tell you something, why liquidity is important. I had, this would be, so 22nd, 7 years, 2 months ago, I have a little nephew. Love this little fucker. Well, he's not little anymore. He's got a, like all Indian people, he's got a mustache at 12. He's got what we call a crustache. He looks like a future engineer to me. But 7 years ago, 2 months, couple days, you know, my little nephew, so I'm living in Michigan. My little nephew, so both my aunt and uncle are doctors, so their kid, well, I think it's my nephew, shit, I don't know. With Indian people, we got so many damn cousins. But I grew up with this kid. So, you know, usually I'm sitting at home all day, like doing nothing, right? Fucking fiddling around. So my family thinks fiddling around my computer. So the kid gets in, he's playing in the gym, he gets hit in the head. He's playing like the T-ball or baseball or whatever. He gets hit in the eyeball by a bat because he's behind. So, you know, school calls me up. It's like, dude, the kid's fucking busted out his eye, basically. He needs stitches. So I'm like, fuck, like I'm in this trade. So I got 10,000 shares of this fucking jalopy. Jalopy just means like this dog. And there's no volume in the stock. So the stock trades 200,000 shares a day. I got 10,000 shares of this bad boy. 200,000 shares a day. There's how many hours in the trading day? So it goes 9:30 to 4. So you got, say, 7 hours, right? 7.5 hours, give or take, whatever. So let's say 7 hours. So 200,000 shares a day, 7 hours in a trading day. This stock trades 30,000 shares an hour. 30,000 shares an hour. So there's not very many buyers and sellers. For a stock to be bought, say you want to sell 10,000 shares, you have to have somebody to buy them. So I sat there and I'm like, man, my nephew, I got to go pick up my nephew, but I got this 10,000 shares of stock. And I'm like, whatever, man, he's my nephew. I got to go. So I dumped the stock because I got to go. So there's no buyers in this stock because it's illiquid. So what ended up happening is I had it like $10.20. Man, I remember this like it was yesterday. So I had it at $10.20. So I had a market order, which means you just sell at will to whoever the nearest buyer is. So it looked like I could get out at about $10. I had it as $10.20, but I had so many shares. I'm like, oh, probably I'll be out of it by $10. So I'd lose maybe 20 cents on the slippage. By the time my last shares were sold, I had tanked the stock because it doesn't do much volume to almost $9. So I ended up losing on a good chunk of my shares $1. So I ended up losing about $10,000, give or take, on the trade because there was no liquidity. See, when I was looking at it, the price was $10.20. And at max, I thought maybe if I dump it all in a fire sale, I would be able to get out at 10. That thing got to 9 by the time my last shares were sold out. I mean, you're talking the last shares I lost, 1.2 points. Liquidity is important. Look, at some point, you're going to hold a stock and you're going to be in a jam. You have to dump it. So if there's nobody there to buy it, it's a no buenos. No buenos. I think that was the one that lost me all my hair. Whatever was left of it. So liquidity is important. Relative volume. Volume compared to its average. If you think about the biggest movers like in the market in any given period of time, the biggest movers in the market almost always have they have high relative volume. So when you think about any given stock that's running real hot, what you'll often see is a high relative volume in the stock. So when you think about stocks that have had big moves over the period of a handful of months, one of the things that you'll see is high relative volume. So see how this stock was just sitting around, right? 37 cents. All of a sudden it starts doing 20 million shares a day. Hey, Tiffany, relax, baby. You're speaking to the big boss. So this here is a stock that, this is more of a regular stock. It's not a penny stock, right? It's a real stock. So what do you notice about this thing? It did almost no volume, and you start to see it creep up. See how it starts to creep up? Look at this, 20 million shares, 10 million shares. It was doing nothing before, right? So if you look at it, it was doing nothing. 100,000, 300,000. All of a sudden, it's doing 20 million shares. See, volume, guys, measures the emotional intensity of the buyers. Volume represents how bad people want that stock. The volume tells you the story of how bad and how desirable a stock is. So we want to see high volume in terms of expansion when we look at particular stocks. All right. So that relative volume, if a stock is 500,000 shares a day and it starts doing 5 million, 10 million, 20 million every single day, that's huge. Accumulation and distribution patterns. Accumulation is when buyers are in control. Distribution is when sellers are in control. Very, very important. Accumulation is when buyers are in control. Distribution is when sellers are in control. Why is this important? So think about it like this. Let me find some stocks that have been trending. If I could turn back time. Hey guys, a bunch of people are asking about my TC2000, the scans and the layouts. If any of you guys are coming, I see a bunch of you guys that are already going to be the next boot camp. If you need the scans or the layouts, hit me up on TC Mail. I'm Canal00. I can send my scans, my layouts, so yours looks exactly like mine. TC2000 is like 30 bucks or whatever, and I think I get like a $50 discount for the first couple months. But for any of you guys that are in the new boot camp or gonna take the new boot camp that we started in 10 days, just put in your email address or your number. I'll make sure to get you the scans. That way you guys are ready to go, because I want your stuff to start looking like mine, so that when you start to trade your software and when we start class next week, your software is looking exactly like mine, so we're not getting into it. So just put your email or your phone number, and I'll make sure you guys get those right away. So accumulation and distribution patterns. Melvin, I got you. Mikey, I got you. Man, so many of you guys coming in class. Mr. Codona, I got you. Just put in your email, phone number. I'll make sure to get you all the scans, all the layouts, all that stuff. If I know a lot of you guys are in this next boot camp or coming or planning on coming into the next boot camp, we got you guys. I don't want you guys to sit there and fiddle around with this stuff. Look, software is the most, I don't know about you guys, software is the most daunting, it's the most hair-raising, intimidating stuff, right? And for me, it took like a decade to learn this stuff. Like, I have this thing down pat now. So like scans. So like software, like people are always wondering, like, how do you find stocks, right? Well, I've made my own scans, like algorithms essentially. So rather than finding stocks, we're just choosing entry points. So like we find, you know, I have like algorithms going in this stuff, scans, so that it's spitting out ideas constantly. And then what happens is the ideas are spitting out, and we just have to choose entries and exits depending on our trading style. So it's pretty fun. You know, rather than like when I was new, I used to sit there and like I'd read Investors Business Daily, like all this stuff, and I was always hunting for ideas. But now, like, we don't hunt for ideas because the ideas are given to us by TC2000. Like, I have written the program so that the best ideas show up all the time. And then we just have to be sitting there looking for potential entries, you know? So not the slides, the scans, meaning the TC2000. And Kristen, you know, you got to be always at the end if you're going to get that boot camp. You know how I do things. Accumulation distribution patterns. Accumulation is when buyers are in control. Distribution is when sellers are in control, right? So like when you think about like a stock, all right? So when you think about a stock, like what you always want to be looking at is like different like price patterns. So when I think about like, say this here, right? So let's talk about this here. So what accumulation means is like on its up days are the green bars. Yeah, Julius, of course I can. On the green bars, by the way, you know, I'm trying to teach a class, my friend. As much as I'd love to sit there and jibber jab with you, I could, or we could teach. So the green bars is when on your updates, you want to see the green bars bigger than the red bars, right? So like notice how like this stock, it went up these 2 days and then it had a down day. See this red bar? But see how the volume was less? And then see how in the up days it was more? And then see like how it dropped 2-3 days, but the volume was really light. Why is that important? Does anybody know why that's important? Green bars being bigger than the red bars. Anybody know? Good, good. Sunil, what's up, baby? Hey, Melissa, how you doing? Hot damn, Sandeep, good to see ya. Okay, so these are great answers, by the way. So the reason is this. So the reason is this. So the reason is this. When the green bars, if the green bars are bigger than the red bars, so the red bars mean down days, right? So a corresponding volume bar on the down day means your sell volume. So if the sell volume on its down days is really light, what it means is that the dips can be trusted. It means that the dips can be trusted and like you can buy actually the dip. Does that make sense? So what it means is essentially like if there's a lot of selling on the days it goes down, you can't trust the dip. Most likely it's not going to hold. It's not going to hold at its moving averages. It's not going to do any of that. So what we want to see is on days it goes up, big green bars of volume. And on days it goes down, if the volume bars are smaller, if they're lighter, then what that's telling us is that there's no selling, real selling going in place. It's just profit taking. It's just a little bit of profit taking. We call that, like we used to call them, me and Mary Beth when we were kids, basically, is people are just getting their cell phone money. Bulls are in control. We used to do it all the time. Me and Mary Beth would be in this hot stock, and it'd be rolling and be like, man, we got to pay our cell phone bills. We better sell something. And it was just a term, right? It just means we got to pay some damn bills. We trade for a living, so let's sell some. So it's just profit taking. You're not dumping everything. You're taking a little bit of profit, but what the difference between profit taking and real selling is big volume bars, big selling. If those red bars are bigger than the green bars, you run. You don't want to buy a stock. So like say like this, like we're talking about moving averages and stuff, right? So like say this thing ramps up and then it pulls back to the 9 EMA. So like on a short-term trade, that type of pullback to your 9-day moving average is really powerful. It's a good area to potentially get into something the first time it holds. So what we want to be doing, we can buy here, but only if the volume is light. If the volume was big, heavy selling when it pulled back to the 9 EMA, then we can't buy that because the 9 EMA won't hold. See, this is a moving average, it's a line, right? It's a damn imaginary line. So like if the selling was really heavy, you think your imaginary line is going to hold a stock up? No, right? We want to have light pullbacks. See, when the volume is light on the dip, your indicators work really, really well. But if there's intense selling, there's no amount of indicators, support and resistance, or anything else that can hold the stock up from doing what it's going to do, which is crash. Everything works better when the volume is light on the pullback and heavy on the push. But if you get a crash type of pullback, you can't trust the dip. So when you get, and guys, there's so many of these things going on, right? These little things that just pop up. When the selling comes in, like, can you buy this even though it's 10 cents? Can you buy this? Too much selling. Exactly. Look, this thing is selling at 90 million shares a day. Can you buy this thing? Come on. We can't, right? And that's where things really kind of get out of hand. So we want light pullbacks. Hey guys, a bunch of people have been asking just if we could get like a 2-minute break. You guys want to take about 2-minute break? We'll recharge our batteries. I don't mind taking a pee myself. Cool. Give me 2 minutes. We got a lot of work to do. Guys, it's not about how much time we have left. It's how much time you guys can last before I'm done teaching you. Good, 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 good. All right, let's give it about 1 second. Let everybody come back. Hey, Vinod, how you doing? Guys, I'm really appreciative you guys all stayed this long too, man. It's hot. I'm sorry I get a little excited. Hey, Joseph, man, I actually had a couple Filipino traders in my last class. I got to introduce you to them. Matt Miller, good to see you, man. We will give you a call. 403, is that Calgary? Oh, man, you know my business partner, I don't know if his name is Rahul Sood. He started a company called PC Voodoo, and PC Voodoo started in Calgary, I believe. He's my mentor. Oh, yeah, oh, yeah. All right. Guys, you can't outlast me. I'll take this thing all the way to the end. Hey guys, a lot of people are still asking me about the next boot camp and about the scans on TC2000. So yeah, just put in your email and number and I'll make sure somebody calls you tomorrow and gets you all that stuff. I apologize for meandering a little bit. Nina, let's go. Let's go. It's go time. It's show time. Irvin, I see you, baby. Cool. Yeah. Carl, how you doing, buddy? Steve Rivera, my friend. It's good to see you, by the way. How are you kids? Not really that many supplements, but I do take these athletic greens. I usually take a couple scoops of these every day. All right, cool. Let's go do what we do. Cool. All right, so let's talk about moving averages. Moving averages. All right, so moving averages are very, very useful for a particular reason. Moving averages serve two purposes. And guys, anybody that's interested in the next boot camp, just put in your name, phone number. We'll do basically a trading consultation, figure out where you are, and then what classes to put you in. As you know, I teach this stuff live. I go for it every single day. Moving averages are useful. They serve two purposes. We help you identify trends, and they help you identify areas of support and resistance. Moving averages, the 9, 20, 50 are the most important. Your 9 and 20-day moving averages equals short-term trends. Your 50-day moving average is your intermediate-term trend. Your 200-day moving average is your long-term trend. So like when you're looking at this, so bring up your free stock charts. Bring this shit up. Sorry for the swearing. So like your 9-day moving average is your short-term trend. So when it's sloped up, it means your short-term trend is up. When it's sloped down, it means your short-term trend is down. Your 20 and your 50 are your intermediate, and your 200 is your long-term. So say you're making a short-term trend, and your 9-day moving average is pointing down. What are you doing right there? Does anybody know? If you're doing a short-term trend, you're buying something, but your 9-day moving average is going down, what exactly is happening there? You're going counter trend to what you're trying to do. You're trying to take a short trade, right? But your 9-day moving average is going down. So this stock is going down every day. And you're thinking that you're going to be just this God that predicts the day, the minute it goes back up? No. I mean, you can. There's going to be patterns to do that. I know how to do that. But like, you can't just blindly do that. I wish you could. It's a little bit more tricky than that. The easiest way is if you're making short-term trends. Hey, Kristen, I can get you into this boot camp. I got some Australian students. See, if you're taking short-term trends and you're taking short-term trend, then that 90 you made pointing up, and it's coming right up under that kitchen. That's when you want to make your trade. Yeah, you don't want to go counter trend. But and like think about it like this: what if your 200-day moving average is going down? That's your long-term trend, and you're getting into some investment, some longer-term thing. And that 9-day move, that 200-day moving average going down. Holy, I mean, you're praying to the gods essentially. And so we don't want to even get in to that kind of point. But if you're taking a long-term trend and the 200-day moving average is still going up, then your long-term trend is still higher and you have the opportunity still to trade with the trend. And I think that's going to be it's going to be really, really important. So that's just huge. A lot of people are mentioning that they got to bail out of here in a few minutes. So I'm going to just touch on a couple things, and then we're going to loop back into these moving averages. So I've got a lot of slides, a lot of stuff to do. So people are they say they got to leave, so I got to mention the contest winner real quick. Today's contest winner. And then we got to loop back in because I need about another hour with you guys. I'm sorry, man. I was trying to get all this done in 45 minutes, but it doesn't look like I could. So today's contest winner, Bulls Vision annual membership. That's 24/7 trading room access, my live screen share trading for our computers. Watch me trade live every day. All my students. Scott, I got you. 304. Woo! Okay. Live access to community with hundreds of traders. Charles Humans, email us if you've got to claim your prize. All right. You guys can definitely, Charles Human, you come in. Guys, our 60-day boot camp, I'm going to get back into class slides in a second. For those of you guys that are interested literally in learning how to trade from A to Z, my 60-day boot camp is, I think, the best way to trade. If you've been online and you think you can watch a couple DVDs, watch some dude's videos, and you're going to learn how to trade, not going to happen. I'm not trying to badger you or anything like that. Just can't happen. Why? It's no different than being a doctor, a lawyer. This is my job. I spend my life doing this. This is a job. You're competing against me, then you got to know how to trade, right? So I teach live. There's no fucking recordings, none of that bullshit. Like we go live 4 days a week for a month and then a second month. You need that many classes to get good at this just to understand the material. But don't worry, by the end of this 4 days, you're going to have a good base. So I do 28 live classes. Every one of my classes is recorded, archived on my website, Bulls on Wall Street, so you can rewatch. My students have lifetime access to my classes. Everything is recorded. So like if you go on the Bulls on Wall Street website and you guys click this button, go on the Bulls on Wall Street website, you click 60-day bootcamp, the registration for the next classes, our forum where we chat with each other, quizzes, homework, like everything you can think about is on this page. So you can go back in and watch all the old videos. I'm constantly in class. It's awesome. Here we have all the setups, the scanners, trade journals, checklists, and then even boot camps from years ago. You can watch boot camps from 2014 if you want to. I have them all on there. So my students, I teach live, but you can watch any damn boot camp you want from as many years ago as you want. I'm on boot camp 36, by the way. This is going to be, what, 37 or 38. So you can go back and watch all of those. So it's pretty cool. Everything you need is in this. I teach live, but it's all recorded. Because I know a lot of you guys are from, Australia, 614, Columbus, come on. I'm a Michigan State fan. We'd be kicking your ass all the time on that football court. So, classes are recorded. Questions, Q&A sessions every single class, quizzes, homework. I do market recaps. So this is the best part about what we do. I teach class live. Then I get my students, I give you guys access to this. And this thing is a beauty. This thing's a beauty, guys. So this chat room, I post all my trades in here, but I trade live. I go on GoToWebinar, I trade live. It's not a chat room. Chat rooms are for pedophiles, shredders, men of honor. They trade live. They put their trading platform up and they hit their buttons in front of their students and show them how to trade live. So I put a webinar link up every single day so you can watch. So the stuff that you learn in class, in those 28 classes, which is a lot, I'm showing you live real time. My resume is in real time. And you know what happens? Every day, I post a snapshot of all the alerts. Some days I make money, some days I lose money, some days I make a lot of money, so on and so forth. Like Friday, I was off my game, whatever. But I'm trading in front of my guys every single day. It's really important because that's how you're going to take that book knowledge and make it into real life knowledge. You got to have that. There's two things that happens when your teacher trades in front of you live with this trading platform. Most traders just put some charts and they just talk through it. They're not showing their platform because they don't have the balls to show their profit and loss. You gain confidence and you learn quicker when your mentor can actually trade. Right? So I teach live. We got quizzes, homework. I do recaps. Once the trading day's done, I teach the students what the heck we actually do during the trading day. So I recap it. So what I do is I take my profit and loss and we reverse engineer every single trade. Why is that important? Well, you have to because that's how you learn. Once all of that is done, my month 3, I put my students on a trading simulator. You'll have a real-time, real-life trading simulator to trade off. That's going to be really, really important. Why do you need a trading simulator? Tell me, does anybody know why would anybody need a trading simulator if you watch all these classes? Good, Mike, Xavier. Good. So guys, a book is just a book. Can you learn how to be a brain surgeon from reading some books? Or do you got to fiddle on some monkey's brain or some giraffe's brain, right? Before you move on to humans. You got to practice it. The practice of your book knowledge is so important. It's going to build your competence. But most importantly, right, it's going to build your confidence. See, you're going to build competence from the repetitions, but then when you get good on the simulator, it's going to build your confidence. So that if you're making money every day on your simulator, you're going to say, man, I can do this in real life. I can put some money in. Now, all of a sudden, you've got something there. I have some direct statistics. If you can do XYZ in a simulator, you can make some money trading live. So I narrow everything down into data. So it's very important. We work on personalized trade plans, business plans. You wouldn't open a restaurant. You wouldn't open a restaurant without a business plan, would you? You go to a bank. You open a restaurant. Want to open a restaurant? What are they going to ask you for? What's your business plan? You want to show up with a business plan, would you? So why would you do that with your money for trading? You need a business plan. So we work on those business plans. We have private trade community. It's lifetime access. Steve Rivera, I have something for that. We have a replay simulator also. And then in this particular boot camp, because I believe this, a lot of people are not seeing it right now because the market stinks, I'm going to give you my cryptocurrency trading program. It's like 16 hours of cryptocurrency trading. I'm going to give that to you guys also. My personal belief is long-term in the next. My mentor from Calgary is Rahul Sood, Rahulsood. Still my mentor to this day. He's the man. So I'm going to give you my cryptocurrency program. My mentor Rahul got me into this stuff. I believe long-term, that's where some of the biggest returns are going to be. So I want to teach you guys that too. My trading system or style applies to futures, crypto, all that stuff. All right. So what I'm going to be doing for the first 5 people, I'm going to give an early bird pricing plus cryptocurrency bootcamp. All right. So put in your email, your phone number. I believe it is, I don't even know. I believe I'm going to just make up a price. I believe it's $2,300 for the cryptocurrency bootcamp and the Bulls on Wall Street Bootcamp 60-day course. All right. We have early bird pricing on it. If you want to be, I'm going to do, first of all, a couple things. A kickoff class on Friday where I individually work with the students to get them ready for the bootcamp class. I'm going to figure out your goals. I'm going to come up with a plan on how to best get you started. You're going to get the rest of this stuff. It's going to come in for the first 5 people. You'll get the early bird pricing. So type in your number, type in your email. I'll have somebody call you tomorrow, figure out your goals. These 2 guys are my business partners. They're totally awesome. You can definitely, you'll hear from them tomorrow. So put in your email, put in your phone number. I'll make sure to have somebody give you a call tomorrow. It's going to be super important. We're going to dig back into class in a hot second. So remember that. You're going to get all this stuff plus the cryptocurrency bootcamp. Bootcamp class starts at 8 p.m. Eastern time every single day. That's going to be, everything's recorded, archived. So anybody that's interested in early bird pricing, make sure, put in your number. We'll take the first 5 people and I'll throw in that cryptocurrency bootcamp. We're going to get an awesome party started. And we do have payment plans and all this stuff. Look, in the end of it, don't let money be your holdup into figuring out how to trade or doing something you love. I'm pretty easygoing. Like if you have something that's going on or we need to do something, I will make sure you get in that damn class. You know, put in your phone number. I'll have somebody call you. You can explain your situation or whatever is going on, and we'll make sure to find a way to get you in that damn class if that's what you want to do. Don't be one of them people that sits there and thinks like 2 weeks from now or 3 weeks from now or 3 months from now, like, fuck, I should have took that class. The market's hot. I'm telling you, there's some things going on in the cryptocurrency world right now, and there's some things going on in the stock market where we don't want to miss this hot opportunity of the market. So this is a good time to learn all this, man. This is a good time to learn all this. And yeah, it can be. We have financing options, payment plans, all that stuff. Mike, classes are at 8 p.m. Eastern time every single day. So definitely, Kristen, we'll get you that early bird pricing. If you don't have them, phone numbers, put in your Skype, put in your number. I'm going to give you guys a call. Guys, there's no time to learn better than now, but one of the things I really think about is just there's things going on in the markets right now. We got to get on this because this is not a quick fix. Like you can't learn this stuff in two weeks. So, anytime you're thinking like, man, I just watch somebody's DVDs and learn this. Now, you need a real mentor. You need a real program, and everything else flows from there. If you cannot, so this is my cell phone number. So if anybody needs a chat, you call me personally. If you want to, you just have some reservations or want to know some things, you call me. And I'll tell you anything about your trading class. Like if you're researching anybody else or anything like that. If you cannot call your mentor on his cell phone, he's not your mentor. He's a vendor. Always think about that whenever you're thinking about something. You want to buy something from anybody, and you can pay a lot of money because $2,300 is a lot of money. you can't get the guy on the phone, that's not your mentor. He's just selling you a class, right? So that's where you want to go with it. So I encourage you to text me right now. Text me right now. Let me know what your thoughts about the webinar, all that fun stuff. I love to hear from you guys. You'd be surprised, man. I call people back pretty often. I always text people back. It's just what I do. So put in all your info. We're going to get this thing started, and I'm going to finish out the rest of this class. I know we still got, guys, we still got a few things to do here. So, dude, I apologize for going so long, but, man, I got so much stuff to fucking teach you. So we got to keep going. So let's talk about moving averages. So moving averages help identify trends. And then it helps you identify areas of support and resistance. So like when you're thinking about your moving averages and you have like a hot stop, your moving averages will actually act as bounce points. They will act, and I got you, Kenya. Thank you. I will have somebody give you a call. Jose, I will have somebody give you a call. Daphne, I will have somebody give you a call. Daphne, we don't do personally options, though. Mr. Hall, 615, that's got to be the dirty Nashville. I'll have somebody give you a call. Bell South, now that's a blast from the past. Good, Miss Proctor, I got you. Mikey D, good. I look forward to having you in boot camp. Big Joel, I look forward to having you in boot camp. Woo. We're going to have a fun boot camp, by the way. So now let's talk about this. So moving averages can actually act as areas of support. So support means areas where demand may flow into a stop. So why and how do we use the moving averages? So do you guys notice that certain times a moving average will hold and then certain times it doesn't and it goes to different ones? Why is that? Does anybody know? Come on. Anybody know? I'll send you. Anyone that gives me the best answer, I'm going to send you one of these Bulls on Wall Street hats. Come on, who knows why certain times moving averages on certain places will work and certain times they won't? Come on. Best answer gets this hot hat. I got a pink one too if you need it. Oh, man. Okay, Tammy, I got you. Not bad answer. Who else? Why would a moving average hold one time on a 9 EMA but not another time? Good. Good. Ruben, good. Lindell, good. Xavier, good. Man, you guys make me proud today. See, I got thinkers in this group. I got people that are actually thinking. Cameron, awesome. Melvin, awesome. Mike, great to hear. Camilla, whoa. All right. So look, this is why certain times moving averages will hold and certain ones won't. Look, if it was life was just as easy as you could buy a stock when it hits a moving average, and then all of the sudden, that's how you make money? That's crazy, right? Imagine trying to line. We'd all be bajillionaires. It touches a moving average, we'd buy. Remember that we are lawyers. We build a case. We build a case. Just because a stock hits a moving average does not mean we buy it. See, we buy when there is a case. Well, how does a case start? First, write it down. Price patterns. Number 2, volume. Number 3, moving average. Number 4, stochastics. Moving average is just one piece of the puzzle. Exactly. Exactly, guys. Woo! That's why. Imagine that we lived a life where we just bought because something hit a moving average. Wouldn't that be nice? Shit. All right. Take a lot of time off my day. But we have to build a case. A moving average is one piece of the puzzle. But an indicator, remember this for the rest of your lives, An indicator will never tell you when to buy or sell. An indicator just confirms your price pattern. So you have a price pattern, then you overlay your indicators. Those indicators can only confirm the price pattern. They add validity and confirmation to your price pattern. Pretty cool, right? 925, is that Green Bay? Or Wisconsin at least. Your indicators confirm. So we still need a whole case. So like there are times where it may bounce off certain moving averages because there's a case. But like you can't use it alone. Great, Carl. You can't use it alone. And that's where we've got to go with this. So what I will be teaching you guys is when and how to hit it when it does hit certain indicators, when you get the rest of the case. I was born in D-Town too, my friend. Well, I was born in Jersey, but I grew up in the D. Awesome. So volume is just one piece of it too. Small piece of it. It's the case. The click fund is the next step after the boot camp. You're correct. So now, stochastics. What stochastics do is they measure overbought, oversold. $20 is oversold, 80 is overbought. It is a cool hat, I know. So when you see something on stochastics, anytime you go under 20, what it's essentially telling you is that price is more likely to bounce because it's oversold. It's come down too far too fast. And vice versa, anytime you hit over 80, at some point it's essentially telling you that price has to come back down because it's overbought. This becomes really huge because when we think about trading, it's all about probabilities, right? So if something has been going up and it's gone up too far, too fast, and the stochastics hit overbought, and you want to buy it, there's a good shot that at some point, not that day or the next day, but at some point, it's going to come crashing back down. Not crashing back down, but it's going to come back down. And vice versa, when it's oversold, when something has dropped, and it's come down too far too fast, and that stochastics get oversold under 20, it's telling you that a bounce is probably coming. Now, once again, do we take a bounce because the stochastics are just low? No, we ain't hoes, right? That's just one piece of the puzzle. But if we couple it with a case, now we got something fun, right? So like that low stochastics in the trending stock, those are usually gifts. They're amazing gifts because they give you an opportunity to buy the dip on a trending stock. See, buying weakness, like what I did with Global Crossing, where something's just going down every day, that's buying a crash. You're buying something because it's cheap. But buying weakness in the concept of a trend is a beautiful idea. That's actually smart. And so we always got to go in with that of like, if you can buy the dip, but it's in the concept of a trend, that's a buenos. That's Spanish for good. Pretty cool, right? So 80's overbought means the more likely you're going to fall down, and 20 is oversold. Make sense? Tomorrow's agenda. We're going to break down a day trader's routine. I'm going to talk about a couple plans, a couple trading patterns. We're going to learn how to read a stock's trend, why the trend is your friend. We're going to talk about risk management. Managing risk is the key to the longevity of a trader. Then we're going to talk a little about entries and exits. Today, we were just building a foundation. I needed to show you all the stuff on a chart and how it interacts with each other. Well, now we know. This is your chart. This is how everything interacts with each other. This is what moving averages do. This is what we got, so on and so forth. Now, tomorrow we build upon that, all right? Tomorrow we build upon that. And guys, a couple questions. Yes, early bird pricing. We'll have a different, contest tomorrow, but early bird pricing is for today. So if you just, as long as you don't have to, as long as you got your email, phone number in, you're still eligible for early bird pricing. So we'll give that to the first 5 people. We'll call you tomorrow, all that fun stuff. So as long as you got your email, phone number in, you're still eligible for that at a discounted price. A lot of people are asking what our normal boot camp price is. It's $2,850. But that's without the crypto boot camp. So you're getting the crypto boot camp. You're getting the early bird pricing for that discounted rate. And no, it won't be available tomorrow. A lot of people are asking, is this going to be available tomorrow? Of course. Guys, if you need to find me, I'm on Canal00 on social media. I would greatly appreciate it if you just tweet me at Canal00. Tell me what you thought about the class, any feedback. Once again, that's my phone number right there. Y'all want to get a hold of me? So the crypto boot camp's $1,000. Yes, Camilla, you can. So guys, currency futures, all my stuff works on that. My stuff works on cryptocurrency. I personally believe stocks and cryptocurrency are the best things to do. Forex is for hoes. Good, good, good. Ron, good to see you. Yes, you're available for early bird pricing. Yes, guys, you're going to want to, I believe you're going to want to learn how to trade cryptos. I believe it in my heart. I'm telling you. Like day trading stocks is awesome for making money every single day. It's the easiest and the best to do. You want to make long-term cash wealth building, you've got to learn cryptocurrency. Like if you're not, then it's no buenos. Hey, Vinit. So guys, a lot of people saying they're not available some days of the boot camp. Everything is recorded and archived. You have lifetime access. Whether you're available tomorrow or 5 years from now, you can still come into my live classes. So don't worry about whether you're available this coming boot camp on specific Tuesday. You're going to be coming in to boot camp probably for the rest of your life. Let me see if anybody texts. Guys, this is my cell number. Nobody's texting me. This is bullshit. Oh, somebody with the 860, hit me up. That's what I like to hear. Guys, I'm a teacher. I'm a mentor. I want to hear from people. If you have a mentor that won't pick up your phone, he ain't your mentor. Kambi, I got you, baby. Shaman, my friend. Oh, man, that's what I'm talking about. I want to hear from you guys. Hit me up. Awesome. Sunil, cryptocurrency bootcamp is just a part of our Bulls on Wall Street bootcamp. A lot of it will be video-based, and then some of it will be live. Guys, a lot of people are asking, is crypto the same as bootcamp? Crypto the same as Bitcoin? Yes. If you have Bitcoin, that's great, but are you making money off Bitcoin is the key. Awesome. See, now my phone's ready. Now we're talking. 607. I like it. Man, a lot of people from Orlando. Some people from St. Louis. Hey, serious. I'll tell you what, man. If you got an audience for me, I'll make my ass down to the Philippines. I'll hang out with you guys. Cool, 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 cool. Guys, feel free to ask me any questions you want. Any questions you want. And of course, yeah, let me know. Put in your phone number, put in your email if you want to get, look, if you just want to talk about your goals and whether trading is good for you, then you put in your email, your phone number. It's either going to be me or one of my partners that calls you, and we will we'll figure out, like, does it fit your schedule? Does it fit your goals? And we're going to be figuring out. There's no interest rate. I'm not a bank, Matt. No, there's no interest rates. Hey, Patty, good question. So Patty's asking, like, I made quite a bit of money on pump and dumps. Is there a reason why you don't like these? It's just not my style. I'm just into more regular trading, I guess. You know, I like trading trends. Peggy, I got your email, baby. I'm going to hit you up. Okay, okay. Look at all these people coming in. Who's got the 850? That, you know, that's my neck of the woods. 860, that's got to be Connecticut. This is what I like to see, man. Oh, good question. So, guys, people have been asking me, everybody here, if you want to get into the chat room and you want to watch me trade live, every single student of our boot camp gets free chat for 3 months. Yes, of course. I ain't going to charge you for the damn chat. Good question. I'm in Destin, Florida. Isaiah, Bill him in prison, man. If you in jail, this is a good time to learn how to trade stocks. Oh, shit. Hey, Tiku, good question, guys. Tiku is asking, like, I sell stocks too early. Like, what do I do? First of all, write out a trading plan before you get into any trade. Guys, remember this. If you write out your trading plan before you get a trade, you're making a commitment to yourself on what you're going to do and when it should happen. So then that's where you have to stick to it. But if you write it out, you're more likely to stick to your plan than if you wing it, all right? When I was new, my mentor, Paul, used to make me write out every trade before I took it. I'd say, well, I don't want to do that because I might miss something. He goes, if you don't have the patience to spend 30 seconds writing it out, then you probably shouldn't be getting into that trade. It's an impulsive trade. So you write out that plan, because when you write something down and it's a journal, that's a commitment to yourself of what you're going to do. And man, if you write that down, you commit to yourself that this is what you're going to do, and you can't do it, fuck, we got a lot bigger problems. Because you don't want to screw over yourself. Sure, your geeky neighbor Bob, who, you know, lets his dog shit on your lawn, that guy you can screw over because he's a dick, but not yourself. So write out your plan. That's going to be huge. It only takes 30 seconds. This is what you do when you write out a trading plan. Write out the name of the pattern. Write out the case. Write out the perfect entry price, your stop loss, and what your target is. And then write out just concerns for the trade, just so you have it in the back of your mind. You have a couple concerns, and then judge it at the end. Big. It's going to keep you from so much trouble. You got to do it. Good, 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 good. Ryan, yes, you can still be available for early bird pricing. So, guys, if we have a couple people above the first 5, we'll still give the early bird pricing. Ryan wants to know. Tim, yeah, guys, I'm not going to stickle you for it. Put in your email, put in your phone number. I'll make sure to give you guys a call about your goals and all that fun stuff. When you set a stop, is it a trailing stop or hard stop? Ken, good question. It is a hard stop. Neelam, I'll make sure to email it out. Hey, Chris, good question. Chris saying, do you have the same strategy on every trade? Sometimes I sell 25%, 50%. Neil, I tend to have almost the same strategy for every trade. I would change it if the market conditions change and I have to sell quicker. Like if the market's in a downtrend, I might, rather than scaling out 1/3, I might scale out the whole, halves. Shout out to the Z Fruits out here in the Philippines, in Manila. Armengol, I really appreciate you coming in here. Adam's asking, like, have I ever used a stock screener and trading view? No, I use trading view for cryptos basically. Irving, I got you. Okay, good question. So a lot of people are asking about the 60-day boot camp, the interest in it. A lot of people are asking questions about this. People are asking, what if I can't day trade? Amazing question. So if you cannot day trade, we actually spend a good chunk of the class, 5 classes, 10 hours on swing trading, longer term trades. Why? Many people don't know this. When I quit my job, which a lot of you guys want to do, when I quit my job and saved up enough money, quit my job and made enough money trading, I was doing almost 0 day trades. I was at my work doing swing trades. I was doing 2 to 5 day holds. I'd have 3 or 4 stocks going that I was hoping to get 20, 30, 40% type gains. Hoping, not always, but I was hoping for those bigger returns. And that's how I built up my bankroll and made enough money to trade stocks. I mean, trade for a living. I wasn't day trading all day because I had a damn job. I was trying not to get fired. Sure, I would take day trades here or there, but I was doing swing trading. So in our boot camp, we have 5 classes on part-time trading. Stuff you can do from your smartphone, your iPads, all that fun stuff. Where if you have a job, you're a doctor, lawyer, accountant, janitor, prison guard, whatever, you're going to want those swing trading classes. Good question. Cameron saying, what percentage decline do you sell your stocks? Every single stock you sell is dependent on the price pattern and then support and resistance for that pattern. It's not percentage based. Sometimes you may sell a stock if it goes down to $1. Sometimes it might be 1% or 2%. Wherever the big support is, depending on the type of trade, that's where you're getting out. That inflection point where your trade becomes invalid. BJ, I got you. I'll get you. I'll hook you up. Sunil, does day trading improve you to become a good swing trader? Yeah, the more you trade is better for everything, but I think you have to be a good swing trader to be a good day trader. A lot of people are asking about cryptocurrency. Guys, my 5 biggest trades in my life, so I use day trading to make income. My 5 biggest trades in my life, I'm talking about the 6-figure type of trades, have come from cryptocurrency. And most of those had minimal investment. I've had tons of cryptocurrency trades, and I'm hunting for them now, that went up 10x, 20x, like very quickly. Look up Unicoin Gold. Look up VRX. Like I had a lot of them that just went bonkers. You've got to learn cryptocurrency a little bit, because if you're not, you might be forced to learn it in a few years anyway. We're on the ground floor of something that could be hot. And so we've got to learn it. And I'm going to give you that cryptocurrency boot camp on the early bird special. You've got to learn it. Hey, Jose, I use mental stop losses. A lot of people are asking me about how I use stop losses. I use mental stop losses when I'm doing like a 30-second trade, but otherwise I'm always using a physical stop. And very rarely, a lot of people ask about trailing stops. I never use trailing stops. platform to use cryptocurrency on? Mostly Binance and Coinbase. Hey, John, is leverage necessary for a retail trader? No. We can use it, though, smartly and with minimal risk in select places. Like, John, so like leverage is considered a bad thing, but what if you had a stock that's $20 and your stop loss was at $19.90? You're only risking 10 cents. Well, in that particular case, maybe you would use a little bit of leverage because your risk is only 10 cents. So if you use 2x leverage, I mean, your risk just increases a little bit. You know what I mean? Because your stop is too tight. Robin's asking, guys, like, why do I not use trailing stop losses? The reason I don't use trailing stop losses is that most of the stocks that I trade are too wild and the range is too big, and so you would just get stopped out all the time. You would have to use such a loose trailing stop loss that it wouldn't be really worth your time. Hey, Nino, I love you, man. I'll see you tomorrow. I also use Bittrex also, John. Appreciate it, guys. Good. What other questions? Awesome. A couple people are asking, like, how many successful students do you have in your trading boot camp? Look, in trading boot camp, think about like your job. If you go to your job, there's 100 companies at your job. How many of those fuckers are bozos? Like 70%, right? No, just kidding. But in terms of like any company, right? There's like, if you had 100 people, maybe 10 are like really just like your rainmakers, right? And then like 20 or 30 are good people that are working hard, that are proficient. And then there's 50 people that just show up for their paycheck. Well, trading is like kind of the same way. If I have a class of 100, 50 people just kind of show up for fun. 20 or 30 are going to be proficient. I mean, they're going to work hard and they're going to do the job and they're going to be proficient. And then there's going to be like 10 that are like your rainmakers. I've noticed that kind of happen throughout the time. The key for you is going to be what type of there's things you can control. What's your output? What's your attitude? What's your preparation? And if you can stick with those things and really be consistent, you won't be part of the bozo crew. You'll at least be proficient. It doesn't mean you'll be elite because that's a whole nother level, right? But you'll be in that proficient part where you'll be able to make some money, get by, and then try to work your way up to the big dogs. Mr. Obey, as always, a pleasure. Tell your children I said hello. Joseph Aquino, you're right. I'm not familiar with that principle, but I'm guessing it's just probably the way it is of the world, right? Awesome. Who else? Anybody got any questions? Come on. I try to tell you guys can't outlast me. Can't outlast me. What you got? Yes, people are asking, do I offer a watch list of stocks? Yeah, if you go on the Bulls on Wall Street blog, we always put up a watch list. And then in my chat room, I let everybody know exactly what I'm doing. All bootcamp students get free access to chat room. So John gave you it. A bunch of people are asking, like, what do we need to do to prepare for bootcamp? So this coming Friday, I will do a kickoff class. Get you ready for the boot camp. Talk to each one of you guys individually. Figure out your goals and let you know what you got to do. But to start boot camp up, once you guys sign up, I will mail you a course book. I've got a course book that's 200 pages. It is the trading Bible. Let me see if I got one laying around here. This thing is hot. It's caliente. It is literally, it's the thickest book you're ever going to see. Right? This thing has got everything I know about trading in that. It's everything I know about trading. So I'll mail you that. You start reading it. You follow it along in class. And then look, day one, I start everybody off at the beginners, John. So don't worry, like, you're not going to miss anything or anything like that. I start everybody off at the beginning, and we get this thing going. Boot camp starts, I believe, next Tuesday. So that would be, what, the 31st? Hey, Ian, you can ask as many questions you want, man. I got nothing to hide. Hey, Nicholas, for free stock charts, try using Internet Explorer on your free stock charts. It should work. It does on mine. Sham, we can figure something out. Just put in your phone number. I'll have somebody give you a call. We'll figure it out. You know how we are. Patrick's asking, what's the difference between SMA and EMA? The difference between SMA and EMA is SMA simple moving average and EMA's exponential moving average. It's just how it's calculated. I find that there's just certain times one's better than the other. Puneet, I hear you, brother. You let me know when you're ready. I'm ready for you. Sirius, how you doing, man? Sirius Satellite Radio, baby. What is your daily routine as a trader? I usually wake up like 6:30 maybe. I'm not a huge early person. Get up, I shower like I'm going to work. I get ready. By 7, I'm usually out the door. I go for a walk on the beach. I live in Destin. Dip my, almost always, winters, no matter what, always dip my feet in the water. Guys, you don't even need coffee. If you're living by the ocean, you got that ocean breeze in your face, you don't need no coffee. I almost always watch the sunrise every single day. Man, there's nothing more beautiful and nothing makes you more grateful about life than watching a beautiful sunrise. Usually I FaceTime my mom. My mom, obviously, she's like 60 years old. She's always up. So my business coach always told me, get the big things out of the way in the morning. You're thinking your big projects, all that stuff. Get your big things out of the way in the morning. Because as the day goes on, you're less likely to do the big projects, make the tough decisions, do the deep thinking. So in that morning before the market opens, I'm not sitting at the computer like some degenerate, hitting the mouse button. I'm on the beach. I take a walk. I FaceTime my mom. I usually listen to some audiobook type of stuff. Some music. I walk for miles. I just think, I get myself ready. It also makes you just grateful about your life and what's going on. And that's what gets me to that center point where I'm able to trade really well and without thought. And I think that's going to be, I think that's really important. Hey, Jeremy, we'll give you a call, buddy. 910. Is that North Carolina? North Carolina, raise up. I love it. Man, I'm excited, and it is an honor to be to be able to coach some of you guys. Seriously. Look, in trading and in any mentorship, you're only as good if you can find somebody that's as involved in it as you are. Can you get a hold of a guy? Is he passionate? Are you passionate? That's what makes an awesome pairing. Some of my best students, they've been crazy people, literally. Like you hate working with them because they're so intense, but that's what you also love, And so it's awesome to have people that are really involved. I like it. The bigger pain in the ass you are, the more I can deal with you. My best students are usually the biggest pains in the asses. Ken, Mr. Pulverenti, I will definitely go over how I set up some screens. Give me tomorrow because I know we're running late. Hey, Tyrell. So, guys, Tyrell is asking, like, if I have a smaller account, how do I grow it? So you don't have to grow it via penny stocks. Everybody thinks that if they have a small account, they have to grow via penny stocks. That's not the case. When you think about trading, you want to think about range, right? If I have $20 and it can move to 22, but in between that, it might go to 21, back to 20, to 21.50, back to 20.75, and you'll be able to trade like a nice range. You could trade like 200 shares of it back and forth and make $500 in a day. It doesn't have to be a penny stock. If you can make a few $100s every day, consistently trading safe, easy stocks with range and momentum, you build up your account quick. What a lot of people think is when they have $5,000 or $10,000, they have to find one trade where they get some bonanza, like this big 30, 40, 50% gain off some penny stock. That's how they're going to grow. But as you know, with the penny stock, just as likely as you are to get a 30, 40, 50% gain, you're able to get a 30, 40, 50% loss. But in a real company that has news and momentum, you may get a 20% range, but most likely it's not going to just drop off the face of the earth down 20, 30%, right? You have that safety because it's $20, $30, $10, whatever. And so you can still trade aggressively with range without the risk. And that's huge. Most of the online educators are into the penny stocks for one reason. It's a huge scam. See, what happens with penny stocks is the moderator buys it. He has 50,000 shares of it. He tells his followers, it spikes up $1. He sells it, makes 50 grand. Why would he care? Look, if I made 50 grand every single trade I took, I wouldn't give a shit about my students either. I mean, I would, but I'm just saying that's how people think, right? That's what the penny stock game is about. It's crooked. And there's no range in most penny stocks. They don't move at all. People assume penny stocks are volatile. No. Out of 2,000 penny stocks, one moves every day, whichever ones get pumped. So that's not something we want to think about, Mr. Tyrell, range. And like, I'd rather have 200 shares of something that's going to move $4 or $5, because then you can trade around back and forth in that range with really low commissions and take 100 here, 200 here, and it adds up. And guess what? Because if it adds up and you do that every day, what do you have at the end of the month? Something that's consistent, safe, and still some good gains. But yeah, no Hail Marys. Yes, guys, you will get the same web meeting links tomorrow too. Hey, good. So Ian's asking, like, how would we trade if we go into a recession? Whoa. First of all, recession trading is fairly easy. You would think it'd be a happy time, but it's not, because people are losing their jobs, their homes, all that stuff. But look, the patterns that we trade the long side, if you flip them, you could short them all. You know what I mean? So recession trading, there's a lot of volatility. You can short the shit out of stuff. We spend a lot of days talking about shorting. It's awesome. Some of the best money I've made is when the market crashes, and you think it'd be heaven, but it's kind of depressing because, well, everybody you know is losing their jobs. So in recession trading, you're going to make money if you have the strategies, but it's still kind of depressing. John, are there days where you don't trade at all? No. There's always one or two, John. There are days where I don't take a trade all day. So John's asking, like, are there days you don't do anything? No. Almost always there's going to be a few trades, at least at the open. At least I've noticed. But there will be days where you only trade the first hour and then you just bail, which I do a lot, actually. So you don't have to trade all day. There's a lot of days after the first hour things die down. So there are a lot of days I take one or two trades, but I can't remember a day where I took 0 trades. There's 8,000 stocks in this market. The way we scan and use our software, we're always going to find something. Just one or two. That's all you need. Oh, Nolan, you tap it out? Come on. Carl says, do you have any trading psychology books you recommend? Try the Daily Trading Coach by Dr. Brent Steenberger. You can hit him up on Twitter too. It's Steenab, I think. He's an awesome guy. One of the best trading psychology coaches I've seen. Try Andrew Mineker. I don't know if he has any books, but I worked with him personally. He's got a good blog, and he's on Twitter, and you can message him with any questions. Dr. Andrew Mineker. Awesome guy. I worked with him for a long time. I had him work with a lot of our students. that were having trouble with the mental aspects of things. Dude's a beast. He's a great guy too. Hey Tim, guys, Tim's asking like, how long did it take to be consistently profitable? I'd say about 4 years, maybe even 5, give or take. I was a little bit off that last 4th year. I didn't have a mentor till that 5th year. You know, I was trying it on my own, so I think that had something to do with it. When I met Paul, who's my mentor, probably about 6 months it took of him working with me before I was consistently profitable. So 6 months once I met Paul, but yeah, I had a lot of years before I met Paul, I wasn't that good. BJ, do you use trade ideas for all your stock picks, or do you have your own scans? I got my own scans. I do them on TC2000. I also use trade ideas in the morning, but I don't keep it on all day. Martin, I would just register as a non-professional. Well, I wouldn't say the NASDAQ is necessarily weak, Mr. Bergman. It's just had a couple down days. It's still in the, look, it drops all the time. You know, it could still drop, but it's overall in a big trend. You know what I mean? Yeah, it's been down a couple of days, but even if it drops a little bit more, it doesn't really change the overall picture of it. You know what I mean? Like you look at its weekly chart, it's at one red candle. And usually it often has two back to back when it dips. 1, 2, 1, 2, 1, 2. So, you know, I wouldn't be surprised if it had a second down week, but overall those dips get bought up. Does that make sense, sir? Jay O'Neill, thoughts on going all in one trade? Jay, so all in one trade means like different things between you and me. You might be thinking all in one as in like risk everything. For me, I could use all my buying power in a trade, but my risk might be very small. I'm okay with if you're all in, if your risk is like $100, $200 or something small, 1% of your account. You can have 1% risk in your account and still be all in because your risk is so small. But if you're all in and your risk is high, like 20% of your account or 30% of your account or even 10% account, then that's no. Nicholas saying on Finviz, how do you search for low float? Says, Nicholas, I don't use Finviz. I haven't personally had too much experience with it. Cameron, how do you know what stocks are going to be moving going into the market open? Cameron, great question. Number one, I do scans every single night. I run the liquid gainers and top losers scan looking for the hottest movers so that I know what's going to move tomorrow. Then in the morning, I scan for gappers, stocks that have fresh earnings or news out that could propel a stock to new levels. And so I couple those together to figure out what potentially could move at the open. Now, it doesn't mean it's going to move. I still have to watch them for a particular pattern or setup. So what I usually do is I'll narrow down my stocks and I'll come into like, 6 or 7 or tickers or whatever, and I put them on a 6 windows layout list. For those of you guys that are going to be taking the next boot camp, you need this 6 windows layout so you can watch a bunch of stocks at once on TC2000. Put in your name or your email, put in your email, phone number. I'll make sure to get you the layouts. TC2000, I think it's like $30, $35, give or take. Sure, as it would have been the daily trading coach. Jose, what's your favorite? Jose's asking, what's my favorite strategy as a day trader? I would say PR earnings breakouts. Hey, Sirius, guys, Sirius asking, like, how do you overcome big losses? How do you overcome big losses? So, hold on one second. My mom blow me up. So, how do you overcome big losses? So, the best way to overcome big losses, I think, is, well, first of all, take the next day off, because usually, like, usually, if you have a big loss, this is what used to happen to me. I'd lose 10 grand, and then the next day I could be up like 2 grand, but I'd be like, man, I'm still down 8 from the previous day. So I'd keep trading, and then that 2 grand would go negative. So now instead of 10 grand loss, it'd be at 12 grand, and it would spiral out of control. So like I personally believe, like, you know, if you have a big loss, if you have a big loss, take a day off. You know, take a sabbatical. It could be 5 days off if you need. Whatever it takes to get your mind right. During that time, research what went wrong. Like, okay, I had a big loss. Why? All right? I had a big loss. Why? Then you don't start trading till you put a plan in place so that that particular problem doesn't happen again. So if it's a risk management problem, okay, how do I control that? Well, you know, maybe I put a stop loss in. I get a buddy to look at my account. I had a guy that had crazy risk management problems, and you know what he goes, I'll do anything if you can show me, if you can tell me how to not do this again. So I said, all right, fair enough. I said, this is what I want you to do, because you know, he's an Indian guy. His wife was a real ball breaker too. So I said, this is what I want you to do. You're going to give your profit and loss statement to your wife every single day after trading. That way, if you have a big loss, she's going to find out and beat your ass. Now, you don't have to do that, but right, it's just about taking some kind of action. It's about looking at your problem and then thinking, what can I do to fix this? What can I do right now so that it never happens again? How can I make sure that my capital, my life savings, my future, my integrity, my dignity is not broken again if you don't put a solution in place? Then you will never get ahead, because you will make the same mistakes over and over. So when you have a big loss and you have faced the darkness and you have looked at the deacon of death of trading in the eye, you have to come up with a solution. Something simple. It will be painful. It will be embarrassing, but it has to be done. You take a break, you put in a solution, and then it's done. But if you think as a human being, you're just going to learn your lesson because you had a big loss, most people are not wired like that. Some people are. They're called billionaires. But most people are not. They take a big loss. They say, okay, I'm never going to do it again. I've learned my lesson. And then they just do it again. So you've got to go in with that attack attitude of solving the problem. Okay, I'm taking a big loss. I'm going to do X, Y, Z so it never happens again. And that you've got to do it that way. You need a solution. And then you need accountability. So talk to somebody. Get an accountability partner, a trading friend. Like in our classes, you're from, it doesn't matter where you're from. You're from Orlando, Florida. I have 14 students I can name off the top of my head that live there. Claudio Gambit, Mark DeVasto, Kate, Ernesto Molina. Like, you know what? No, you're in Savannah, Georgia. I know 4 people. You're in Atlanta. Oh, man. I know a lot of people with those 404s. Who's got a 404? You're in Salt Lake City with an 801? I got a lot of 801s. So like having an accountability partner can really help you. And that's where you got to go with this and make sure it never happens again. Jeremy, what is a realistic small account to make sure you get good experience and can make some money? $2,500 I think is a great start. Most of the students that trade with me in my trading platform, they can day trade with $2,500. If you complete the boot camp, I can get you access to platform, technology, rates, all that stuff, and you can day trade with $2,500. Thanks, Ian. Anybody else got any questions? Hot damn. Keith, yeah, there'll be a replay link. Martin, I personally don't watch the aftermarket volume, but you could. So what do you suggest is a good broker for day trading? Guys, the best broker for day trading, if you're not trading in my platform, is probably Speed Trader because they get the best rates and the best platform. If you need any info on that, probably put in your email. I can get you a demo to the platform. I know the CEO. I don't have any formal relationship with them or anything like that, but I've used them before and I really like them. Hit up, just put in your email if you need like a demo account. I can get you a demo to Speed Trader and you'll really like it. Ralph, do you use any circuit breakers? If you lose XYZ that you don't trade, Ralph, I do $1,000 a day max loss. If I hit it, I'm out. Ooh, Jay, good idea. Purge. Isaiah, my friend. Martin, you got to be fucking insane for calling me during the middle of the webinar, especially when I'm answering your question. Yeah, I try to tell Omar you're fucking nuts, but he thinks you're a normal guy. Hey, Dad, can I do that tomorrow? Because we're running late and everybody's kind of dropping out. Tell me I need to get this thing go. I will 100% do that. I'll do my trades tomorrow, and then I will I'll walk you through them tomorrow if that's cool. This IQ looks okay. Probably bounces tomorrow. I think its earnings are coming up soon, but so it might trade a little bit choppy, but it looks pretty good. It moves down fast though, so you got to be careful. This is a type of stock that you can lose your shirt on. How do taxes work? I think Andy just asked me that. Usually with trading, you pay capital gains tax for the most part. I mean, there's some caveats to it, a couple % here or there, but in the meantime, I would just assume you're going to pay 35 to 50%, just like you would at your job. I think Josh is out for the count, man. He was answering those questions so fast. I think his girlfriend must have got up on his ass. She's very pretty and very young, and she's probably very demanding. Grego Sherman, anybody that wants to talk about their goals or early bird pricing, last chance, put in your email, put in your phone number. If you just want to talk about your trading goals and maybe what class you need to take, put in your email, put in your phone number. I will make sure somebody gives you a call tomorrow and talks about it. By the way, my sales guys, by the way, are traders. They've taken my boot camp. So, man, you got some trading problems. You got trading herpes, and you need to tell somebody you got trading herpes. You can tell my guys. They'll listen to you and figure out how to cure the trading herpes with a shot of trading penicillin. So, anybody else got any questions? Let me know. Put in your email, put in your phone number. Otherwise, we got to get this party going. The webinar is going to be the same time, same place. And man, did you guys all fun? Give me at least an idea if y'all had some fun. Let me know if you learned something today. Woo! Good. Ha ha. Okay, a couple people have asked me, can I get one of these hats? If I get an early bird special, I will send you a Bulls on Wall Street hat for any of our new boot camp students that start up with the early bird special. This thing is fluorescent yellow. I got a green and I got a pink. And if you want in on the early bird special, I'm going to send you one of the hot hats. So you put in your email number. I will send you that hat and get you that going because, well, frankly, these hats are kind of cool. I'm just Mike Sherman. You never know. Cool. Josh, remember, anybody that signs up for the early bird special, send them a hat. My friends, my people, this is your last chance to ask a question. Go in once. Go in twice. Come on. Son, adios, muchachos. As they say, peace in the Middle East. To my friend, bring your hearts, bring your pens, bring your notebooks. We are going to have some fun tomorrow. Be prepared to work. Be prepared to study. Be prepared to go and attack, because that's what we do. Tomorrow's Money Monday, meaning we are on the attack 24/7, because Monday is the best day of the week. Monday is the day where all the potential comes in. Monday, if you start Monday off right, you are going to end the week strong. You're going to be better than you were the week before. So you prepare tonight, you get your ass up early, and you come in on Monday on the hunt, because it's time to put the women and children to bed and go hunt for dinner. I'm out.